What is good, and welcome back to my YouTube channel. So for today's video, I will be sharing with you guys the thought process whenever I do technical analysis, regardless of any currency pairs, regardless of any market condition. From now on, I will be speaking in English in order for me to reach out to a more larger audiences. Rest assured that all the tutorials, videos are of the same quality. And yeah, without further ado, let's get straight into the charts. But before that, a big shout out to all my VIP students all over the globe. So shout out to you guys, and thank you very much to all your support, to all the subscribers, followers, and if you want further details regarding my mentorship program, do check all the details at the description below. So yeah, let's get straight to the charts.
Alright guys, so again, welcome back to our charting session for our Forex trading analysis, technical analysis. So, just to give you an overview of how is my thought process when it comes to analyzing any particular chart, any particular currency pair. So, in this case, I'm going to analyze dollar yen, USD JPY. So, normally, sorry about that. I follow a certain basic principle of technical analysis. That is my TLCE rules when it comes to technical analysis. So T stands for trend and market structure. L stands for our level or key significant zone. C stands for our confirmation, and E stands for our entry and exits for this particular pair. All right. So how would I attack to analyze this USD JPY chart? So first things first, what is my TLCE? What is my trend as of now? So if we're going to analyze our market structure for this USD JPY, so let's take a look. So coming from a series of downtrend uh, move, bearish movement. So if I'm going to plot all the highs and lows of this market, so we can see that, hold on, the market coming from a high level, high, and then what? It formed a new low. Why is that so? So if you can see from the previous structure, we have this low, high, higher low, higher high. Apparently, that market structure has been changed due to this broken higher low given from this move. So which means we already have a new structures forming. So, or formed rather. So if we're going to continue this market structure analysis coming from a high peak of this move, we have this new low which we have broken this higher low, and then what? The market formed a new lower low, a lower high rather. So if we're going to continue this movement, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then what did the market do? It formed what? A what? A lower low, a lower high rather, and then what? It didn't form a new low, so which means the market halted at this moment, meaning there's momentum of buyers at this point. Why? A certain level has been retained. So instead of the market, if we're going to have a downtrend movement, supposedly it should have this lower low move. However, in this case, the market formed what? A lower high. So this is a significant indication that the market is transitioning to a new trend. I'm not saying this is the only indicator or indication that you will see in the market structure, but this can help you analyze what would be the next move of this market. So coming from this move, so I'll just put some labels on this specific moves. Right, is the high. I'll just mark it as H, and then uh lower low, okay, and then lower high, So I'll just copy these two labels. Right, right. Okay. So as you can see, we have a new form uh higher low, right? So let's just change this to color let's say blue, right? And then what? The market formed another move, which uh we can call as higher high. So from this point of view, we can see that the market is shifting to a new trend. So this will help you analyze what will be the next move of the market and look into some opportunities for a long position. So another higher high and then what? Another higher low. So meaning the market have transitioned from this point, breaking this lower high level. So this is a significant level for the sellers, right? So later on I will just mark uh, this structure as higher low, right? So just delete all of these lines. Right. Sorry, this will take a while, but anyways, I'll just plot. Right. Sorry about that. So, uh, just analyzing market structure, you already have a little bit of piece of idea what will be the next opportunity for you. Okay. Obviously, it's not selling from this point of view, but we aren't sure where is the level we're going to sell or buy. So, from this structure, we already know that the market came from a series of downward movement, and then it's transitioning now to a new trend from this move. So right now we already have satisfied our T section, which is our trend and market structure identification. So we already know the market formed coming for a lower low, then lower high, then apparently the market created a higher low, which means the market retained this level without a trend continuation for a new lower low. So this means the market wants to go up at this point of view. So aside from that, the market created a strong impulse move going up. So that serves as a higher high uh, structure and then another higher low. So in this sense, logically, market wants to create another higher high. All right. So I'm not assuming that the market will do this exactly, but we're just basing it on structure. What would be the possibility of the market creating a new higher high structure, right? So this is just a certain clue for a basis for analysis. What would be our next opportunity, right? So we already have satisfied our T section. Now we'll go to our uh, L, which is our level and key significant zones, right? So I'll just delete again all of this. Sorry about that. All right. So right now we're going to plot our key support of resistance and support in order to make sure where is our current price currently. All right. So I'm just going to plot my key level of resistance and support. So obviously we have support in this level, right? So no doubt about that on a daily time frame, on a higher time frame perspective. And given this average price value, we can fairly say that this resistance have been broken by this move, by this right, by this move, right? Okay, so which means there's a change of structure from this section. And then what's next? I'm going to plot my resistance as well. So resistance is also in this area. Why? We have reactions, right? So I'm going to plot the multiple reactions, this level and this level, this area, significance, this level, and obviously we have a minor support level at this area as well. Hold on. Yeah, right. So I hope you can visualize. Right, so I'm just going to change all of the support levels into green to make it more uh, alright, so the green zones are the support levels and the red zones are the key resistance levels. So right now I'm going to ask myself, uh, where is the current price actually? So where am I at the current market? So obviously the market is at the support level. We have two supports here, one below the current price and one where the current price is sitting at. All right. So what will be the next move? What will be the next step? So trend, we already have the market structure. Level, we already have that the current market is still at support level. So which means we have an idea that we want to buy. Uh, we want to have a buy opportunity, a long opportunity at this market. So what I can do is, do I see any confirmation? Right now, we're going to the C section, which is a confirmation. Do I see any confirmation that the market wants to go up? Then these were the candlestick patterns will take its place or make its significance. So we are going to interpret what the candlestick is trying to tell us, right? So what are the candlestick patterns that we are looking to in order for us to have the idea that this market will go up, right? So let's see. Oops. All right. So do you see any buying pressure candles at this moment? Right? So if you are aware, familiar with your candlestick patterns, if you are knowledgeable on understanding or the interpretations of candlesticks, then basically you already know what I'm looking for, right? So we see this engulfing and also pin bar, which means there's rejection at this level, which means there's pressure from buyers that they want the market to go up, right? And then what's next? There is also a pattern called engulfing as well, wherein uh, the market as a structure, there's a dominance of buyers over sellers. So which means market really wants to go up. So basically, this can serve as a signal wherein we can now go down to a much lower time frame to execute our entry, right? So this higher time frame is our confirmation that the market wants to go up. So this serves as our confirmation candlestick at a higher time frame. So nevertheless, we're now going to a lower time frame to check how we can execute our trade in order for us to lessen the risk. Why? We don't enter at the higher time frame. We don't enter and have our stop loss 100 pips or so. So as much as possible, we want to take an execution wherein our risk or stop loss range is reasonable as compared to our daily time frame or higher time frame, right? So we're looking at the structure. Now we'll go down to a much lower time frame. So currently I'm a daily time frame. So as a swing perspective, I will now go down to 1 hour time frame. All right. So what do we have here? Okay. So as part of the E section, which is the enter and exit, I now go down to a much lower time frame, which is the hourly time frame, right? So just an information for you guys. So I believe you're wondering why am I speaking in English. So this is one way for me to reach out to my foreign students as well as to have more interaction with English speaking audiences rather than just Filipinos. I do know that Filipinos understand English. However, as much as possible, I also want to reach out to those non-Filipino audiences of my channel, right? So how are we going to take this opportunity for a long position? All right. So we're just going to read the structure, and of course, okay. Again, we are looking at the structure at the lower time frame. So again, we're going to read the higher high, higher low, etc. So coming from a downtrend, you can see that the market formed again from a high and then lower low, lower high, lower low. And what did the market do? Form a lower low and then higher high, a new high, higher low, higher high, and then same level, which means this is a strong support level. But still, this is still considered as a higher low, although the market consolidated at this point. And then what did the market do? Form a new what? Higher high, which means there's a break of structure from this level of lower high. All right. So again, I'm going to plot all of the labels for the structure in order for you to understand for those beginner level of technical analysis understanding. All right. So I'm just going to plot my uh, labels higher high and then formed new what lower low and then lower high. I'm just going to copy it. All right. My structure, you already understand what am I doing. All right. So from this area, just kind of subjective, but I guess you already know the idea. Lower low, and then what? Market formed a new high, which is higher high, higher low. Sorry, higher low. Let's just change this to blue. Change this to blue. Right, and then same thing, higher high, higher low. Oops. Right. So by structure, you already know also what the market is doing currently. So it's transitioning again to form another trend, which is coming from a downtrend move. The market wants to go up. There's a break of cycle of this downtrend or bearish movement from this new high formation and new higher low formation. So the market is sitting currently at higher high. So what do we expect? The market, we want the market to form another higher low. So the question is, where is the higher low would be? Which level? So that is where our entry would matter. So again, utilizing the so-called TFP war system, we have to have a confluence in order for us to have an execution, right? So going back to higher time frame, going to higher time frame. Sorry about that. Uh, oops. Going to a higher time frame. All right. So again, as a higher time frame point of view, there's a structure wherein the market wants to go up. So moving down from a lower time frame, moving down to a lower time frame rather, the possible next move is higher low, which means an initial retracement. So we want to know where would be the price at that initial retracement. So which level would the market would react to in order for us to have that entry. So this is where we're going to plot our trend lines, right? So we want to have a confluence based on our TFP war system. We want to have at least two levels wherein the market would be above, or we're going to find the HPT zones or high probability trade zone of the market. So we're going to plot our trend line, and then as per our bullish execution rule, the the market or the current price should be above trend line support and horizontal support level, right? So you can see, there's also a break of structure from this, right? From this point of view, and then we're going to plot our resistance and support. So from that, we all know that we have a resistance initially at this level, right? So we all know that as well. A broken resistance becomes new what? Wait. Hold on. Alright. This broken resistance becomes what? A new what? New support. Right? So basically, uh, this will be our HPT zone from this level. I want to look at this level as my high probability trade zone, meaning I want the market to react to this level prior uh, for my entry, right? So this will be my HPT zone. HPT zone. HPT stands for high probability trade zone. So what I want the market to do is obviously do a retracement. And then what do I look for retracement? I have to look for buying pressure candles. That is the engulfing, pin bar, etc. Then uh, I can execute the proper trade. So from this point of view, I'm just waiting for the what? For the retracement of this formation of higher low. So satisfying rules of the TFPR system, I had to have a confluence, right? So one confluence is if this trend support, the market reacts and should be above this horizontal support. So meaning this area is a hotspot or kill zone for rather for our opportunity as a long position. All right. So this is how I analyze certain technical analysis for any currency pair. So this is just a basic guidelines or basic approach as a beginner approach for those starting in forex trading. So we do all have an advanced stuff. Of course, going to a TFP VIP champion forex one-on-one mentorship. But then again, I'm not saying that this basic strategy will not help you. Of course, I'm teaching this in order for those beginners intermediate levels to have a basic understanding as well as a technical approach on how you can have the opportunity precisely at the same time uh, without guessing for a specific entry or how will you enter a certain market or execution, right? So this is my thought process, just utilizing TLCE rule, trend, level, confirmation, enter or exit. So which means you will have a structured analysis of uh, a certain specific market, right? So regardless of whatever currency pair you're going to trade, this will help you uh, increase your probability of winning the trade, right? So I'm not saying every trade should be 100% winning, but the point here is you yourself definitely understand what you're doing from a basic trader going to an advanced level of analysis, right? So I hope you understand why I may probably take a long position for this dollar yen. At the same time, uh, in order for you to have the take profit level, of course, you just have to go to a higher time frame again in order to plot your take profit, right? So next possible reaction definitely would be this resistance level. So you're probably having a trade going until this resistance level, right? So I hope this technical analysis approach help you and at the same time give you the idea on uh, what my thought process is every time I analyze a specific currency pair. At the same time, how my approach is given any condition of the market condition.
Alright, so that will be it for today, and thank you very much. So I hope you guys appreciate this lesson for today's video. And yeah, so feel free to subscribe and see you again on the next video. Bye.